There is a quiet trick American banks are using right now that is draining thousands of dollars a year from senior checking accounts, and most seniors have no idea it is happening. It is completely legal. It is hidden in the fine print of an agreement you probably signed decades ago. And by the time most seniors notice the pattern, they have already lost more money than they will ever get back. Stay with me for the next 12 minutes and I will show you the 3 specific ways your bank is quietly costing you money every single month. The one type of account that stops the bleeding completely. The trick that catches almost every senior when they try to switch. The second account every senior should have for emergencies. And the simple phone call this week that can save the average senior between $600 and $1,400 a year. Here is what changed over the last 20 years. 20 years ago, banks made most of their money from interest on loans. They lent your deposits to home buyers and businesses, and they paid you a small share of the profit in the form of interest on your savings. Today, a much larger portion of bank revenue comes from fees charged directly to customers. Overdraft fees, maintenance fees, paper statement fees, wire transfer fees, ATM fees. And seniors are the most profitable demographic for these fees because seniors are loyal. They have had the same checking account for 30 or 40 years. They do not switch banks. They do not call to renegotiate. They do not threaten to leave. And the bank knows it. Let me walk you through the 3 ways your bank is quietly costing you money, one by one. The first is monthly maintenance fees. Most large bank checking accounts charge between $10 and $25 a month if you do not meet a minimum balance requirement. For some accounts, the requirement is $1,500. For others, it is $5,000 or $10,000. Some accounts require direct deposit above a certain threshold. For seniors on fixed incomes who are not depositing large paychecks every month, those minimum requirements can be hard to meet. A senior paying $15 a month in maintenance fees is losing $180 a year. Over 10 years of retirement, that is $1,800 gone, with nothing to show for it. The second is overdraft fees. The average overdraft fee in 2026 is between $30 and $35 per transaction. Some banks have eliminated these fees in recent years, but many still charge them. And some banks still allow multiple overdraft fees in the same day, which means one bad day can stack $100 or more in fees within hours. Seniors on Social Security are especially vulnerable because they receive one deposit a month. If something goes wrong in the last week of the month, before the next deposit hits, the fees can cascade. Many seniors end up paying overdraft fees on accidental small transactions, like a $5 prescription copay or a $3 coffee. The third is paper statement fees. Many banks now charge $2 to $5 a month just to mail you a paper statement. For seniors who prefer paper statements, which most seniors do for tax records, estate planning, and good reason, that fee adds up to between $24 and $60 a year just to receive your own banking records. Add all of this up: maintenance fees, occasional overdraft fees, paper statement fees, and other miscellaneous charges can easily run $600 to $1,400 a year for a typical senior. That is real money being skimmed from your retirement every year quietly with your full but uninformed consent. Now, the one account change that stops all of this completely: a senior checking account at a community bank or a credit union. These accounts almost always have no monthly maintenance fees, no minimum balance requirements, free paper statements, and significantly lower overdraft fees, often eliminated entirely. Many credit unions specifically offer accounts designed for members aged 55 or 60 and older with extra perks: free notary services, free safe deposit boxes, free checks, higher interest rates on savings, lower rates on auto loans and mortgages if you ever need them. Some even offer free financial counseling. The catch nobody tells you: you have to ask. Banks and even credit unions do not heavily advertise their best senior products because they make more money on customers who do not ask. Walk into your bank this week and ask 3 specific questions. Question 1. Do you have a checking account designed for seniors aged 55 or older? Question 2. What is the minimum balance to avoid maintenance fees on that account? Question 3. What are the overdraft fees? And is there a way to opt out of overdraft coverage entirely, so my transactions simply decline instead of triggering a fee? If your bank does not have good answers, find a credit union in your area. You can search for credit unions you can join in 5 minutes at MyCreditUnion.gov. Credit unions are member-owned. They exist to serve their members, not to maximize profits for shareholders. The fees are almost always lower. The customer service is almost always better. And many credit unions have accounts designed specifically for retirees, with extra perks built in. Now the trick that catches almost every senior when they try to switch: direct deposit. If you change banks, you have to switch where your Social Security check is deposited. Most seniors think this is complicated and stressful. It is not. It takes 5 minutes. Log into SSA.gov and update your direct deposit information online. The change takes effect on your next monthly payment. Or call the Social Security Administration at 1-800-772-1213, and they will walk you through it over the phone. You can also do this in person at a Social Security field office, but the phone or online option is faster. The same is true for pension deposits, VA benefits, retirement account withdrawals, or any other recurring income. Each one requires a separate update at the source, but each one takes only a few minutes. The total switch from a bad bank to a good one usually takes about an hour of effort spread over 2 weeks. The savings year after year are worth thousands of times that hour. Now, the second account every senior should have for emergencies. Even if you love your main bank, you should have a second account at a completely different institution, ideally a credit union, with enough money in it to cover 1 to 2 months of living expenses. Why? Because if your main bank ever freezes your account, fails to deposit your benefits correctly, or has a system outage, you still have access to rent, groceries, medication, and gas. We covered the bank freeze risk in detail in our earlier video on this channel. Spreading your money across 2 institutions is one of the most powerful protections you have, and it costs you nothing. Many seniors learn this lesson the hard way. Do not be one of them. There is one more critical thing every senior should do this week. Add a trusted contact to your bank account. A trusted contact is someone the bank can call if they think something suspicious or wrong is happening with your account. If you do not have a trusted contact on file, the bank's only option in many situations is to freeze your account and call the authorities, leaving you stuck without access to your own money for days or weeks while they investigate. With a trusted contact on file, the bank can pick up the phone, call your daughter or son or attorney, verify the situation in 5 minutes, and resolve it without a freeze. Walk into your bank this week and ask to add a trusted contact. Almost every bank offers this for free. It takes 5 minutes. 3 steps to take this week. Step 1. Pull out your last 3 months of bank statements. Go through them carefully. Add up every fee. Maintenance fees, overdraft fees, paper statement fees, ATM fees, wire transfer fees, anything else. Multiply by 4 to get your annual cost. Whatever that number is, that is how much your current bank is costing you per year, and that is the number you are about to reduce or eliminate. Step 2. Search MyCreditUnion.gov for credit unions you can join in your area. Call 1 or 2 and ask about their senior checking accounts. Compare the fees, the minimum balance requirements, the overdraft policies, and the extra perks against what you are paying now. If you find a clear winner, get the paperwork to open the new account. Step 3. Open the new account, then update your Social Security direct deposit at SSA.gov. Then update any other recurring deposits and automatic payments. Then close the old account after the next deposit hits the new one. Total elapsed time is usually about 2 weeks. Total work is about 1 hour spread across that 2 weeks. The savings continue for the rest of your retirement. Banks are not in business to be your friend. They are in business to make money. The easiest profit they make is on customers who do not pay attention. The seniors who pay the lowest bank fees in any given year are not the wealthiest seniors. They are the ones who took 1 hour, one time, to switch to a better account, set up a trusted contact, and keep a second emergency account at a different institution. That hour of effort done once pays you back every single month for the rest of your life. If this video helped you, share it with another senior or with a family member who is helping a parent with their banking. The information in this video could easily be worth $1,000 or more a year to someone who applies it. Hit subscribe for more videos that explain the rules nobody else does. Take care of yourself, take care of your money, and I will see you in the next one.